I'm going to take you to the wall first and foremost, show you where the markets are trading. Yes, the Dow hits another new high today. It's those tech stocks, though, that remain under big-time pressure. Take a look at rates. The 10-year at 173. It's the high. It was higher than that. It's the highest level in more than a year. So the trend continues. 10-year moves up. Tech stocks move down. John Najarian, you're getting pretty concerned from what I read in our notes about where rates are and where you think they may go and what the reaction in the market's going to be.
Yeah, Scott. Obviously, this is great for banks. It is not great for a lot of other stocks. Exactly how far they go down will depend a lot on how fast we go up in terms of those yields, Scott. So, I'm looking around at a lot of the banks that I own, and I'm viewing those as partly a hedge. In other words, I've been building bigger positions in those banks because even if rates top out at some level, Scott, like Tepper talked about last week, like I was hoping for, even if they top out at a level, that curve is still nice and steep for the banks. On the other hand, if we just keep marching to the upside, 175 plus today was the yield briefly in the 10-year. If all of a sudden in a week, Scott, we're at 185 and things like that, I think the market gets really nervous, and then we'll really test the mettle of those that think that, oh, yeah, this will be an easy dip to buy. I don't think it will be.
Yeah, Jim, this is not really the market reaction that some were looking for, including some people who sit on our investment committee, like, Steve Weiss, who tweeted earlier today, said, after FOMC Jerome Powell presser yesterday, I had the feeling that NASDAQ would have a big move today. Well, I was right on that, just wrong on the direction, right? The Fed is not raising rates anytime soon. It's not tapering anytime soon. And Powell was explicit yesterday that they're going to communicate far enough in advance that the stock market's going to understand what the Fed is doing. So I was going to ask you, is the stock market getting it all wrong by the way that tech especially is reacting today? And what's your answer to that?
Well, my answer is I think it is getting it wrong in the sell-off that has occurred in technology because of higher interest rates. First off, the Fed gave you anything you want to sink your teeth into. You can hear them say they're not going to do anything with interest rates, which may mean that interest rates go higher. You can also hear them say they're not that worried about inflation. They think it's transitory. I agree with that, by the way. So down the line later this year, maybe interest rates come back in a little bit. But I think the more important point is we've now had a very significant move in 10-year Treasury yields from about 0.75% 4 months ago to 1.75% now. That's a very big move. And my point is, I think the stock market has adjusted to it. Sure, maybe it goes to 2%, but you're so close right now that if you're holding off on buying technology stocks because you think interest rates are going higher, you've got to ask yourself, how much more legs does that story have? I don't think it has much more. And I look at large cap technology in particular, so Apple, Qualcomm, Facebook, Google, and I say these are very attractive, not just on relative valuations, but absolute valuations. Apple at 26 times earnings, 1.9 times PEG ratio. I bought more of it today. Qualcomm, Scott, I bought some Qualcomm today, and that has a PEG ratio of 1.0. I'm going to be very insulting and call both Apple and Qualcomm value stocks. Before this, I might have at least called them growth at a reasonable price. Now they're value stocks. I'm buying those babies.